Hi creatives, it's Claire from Right Accounts, and in this video I'm going to be talking about tax because it's the end of the financial year and it's really important we cover this stuff off. So if you were here last week, when we were talking last week, I was talking about the 3 ways to save tax within your business, and that's kind of the structure of how we save tax, because honestly preparing for tax is one of my favorite ways to reduce the amount of stress associated with running your own business. No more unexpected tax bills to be paid. Maybe a few nice surprises at the end instead. So how would a sole trader prepare an estimate on the tax you might need to pay for the 2020 to 2021 year? Heck, how would we even prepare one for the financial year that's almost over? Now this is where knowing and tracking your numbers becomes essential. So first we have to recognize what we pay tax on. So as a sole trader, we only pay tax on the profit in the business. So we need to get the income and the expenses so that we can calculate the profit, because that's what we pay it on. So don't fall into the trap of thinking, well, if I pay tax on the profit, then if I reduce the profit, I pay less tax. Well, you only reduce the profit by either making less money or paying out more expenses, and neither of those actually works out as an efficient way to reduce your tax bill, because you save 20 to 25, maybe 30%. So you spend $100 to save $25. It doesn't really make sense. Then we need to make sure we add any other income you have coming in as an individual, things like profit on a rental property, dividends on shares, capital gains, and even bank interest. Now you're probably not going to add a few dollars because it's not going to be significant, but any significant material amounts will obviously impact how much tax you have to pay. So what information are we going to use? The 2019-2020, it's a real mouthful, that financial year, presuming you're up to date with bookkeeping, well, you're going to use your bookkeeping numbers with this estimate for what you think will happen between now and the end of June, plus an estimate on anything for that personal income factor. For the next financial year, 2020-2021, we're going to have to guess. Well, normally I would suggest a best case, the worst case, and an average case scenario. But in terms of tax planning, disregard the worst case scenario, because having too much tax isn't a problem you're going to have that much stress about. So we're going to have to develop an estimate. There are a number of ways to do that, a number of ways we can forecast that out, but that is something you're going to have to just, how long is a piece of string, make a guess. So then once we have that number, so we're looking for the profit number in the business plus any significant other personal income that will be taxed, we have to go and consult, well, the tax tables or a tax calculator. Now the tax tables, there's 5 lines and it seems fairly straightforward until you add in the plethora of other things that you either get tax refunds on, like offsets, or you have to pay additional amounts like Medicare surcharge. And obviously you have the student loan that will go through your tax as well. And then there's things like your partner's income, any private healthcare, and all the deductions will impact that final number you will pay for tax. But at this point, we just want to get an estimate that we can use in the business to save for the tax. It doesn't have to be exact, and we're never going to get it exact. It's always going to change. But once we have those basic numbers, there's 3 places I recommend that people check. So the first one, the ATO's tax table, fairly straightforward. Just know it's probably not going to be enough because it excludes Medicare in particular, which is 2%. And there's a few offsets in there that will kind of change the amount. The second one is a really good one I use from an independent journalist called Michael West, and they factored in a few of the different impacts on low and middle income tax offsets, or low and middle income earners as well, and some Medicare things, and just a few different factors. So it's more lines than the ATO tax table. It doesn't quite operate in the same way, but it is really good on seeing those different impacts. And then the third way is to go and use the in-depth tax calculator that the ATO have, but honestly, be prepared to enter almost as much information as you would in completing your actual tax return. But that's how we're going to get to what the number is, what the total dollar figure is we're going to need to pay on tax, estimated. So once we have that estimate, we want to be able to calculate that back to a percentage of the income in our business. Now, if you do have significant personal income, you're probably going to want to separate that from your business. So if it's 10%, you're probably going to want 10% of income tax from that. If it's 20% of your income, that sort of thing. But we want it as a percentage in the business of income, percentage of income, not percentage of profit. I'm not going to be taking out expenses first because that just makes it really hard to actually implement in your business. So let's do an example. Say you have $65,000 of income, business income, no real significant personal income, and then $15,000 in the business of expenses. So that's a really good profit of $50,000. So from that, we can work out that we're probably going to pay tax of around $8,000, which is 12.3% of income, not expense, not profit, just income. So that's why it seems low, because it's not the profit on, it's not the tax on profit, it's the tax on income. But then each time money flows into our account, $100, $1,000, even $10,000, we know that 12.3% of that income should be set aside to make sure we can afford to pay our tax bill. And this is the minimum we should be saving. Ideally, you want to be rounding that up because hopefully you're going to do better than you expected to do. You're going to want to be adding in superannuation. So my suggestion, if your numbers came out at 12.3%, would actually be 25%. So you're covering off, 10% for super and then a contingency as well. So going forward, this is not a set and forget strategy. You don't decide whether it's 12.3, you're going minimum, or you're going 25%, nice and optimal. Don't just set the percentage in June, July, and then forget and never review. That's not how this works. Unless your business is super consistent in income and expenses and therefore profit, and then maybe once a year is fine. But otherwise, we're going to course correct throughout the year. And you can either do this monthly or quarterly, or if there's a significant shift in your income or expenses. So say, for example, you underestimated the amount of expenses, so your profit is less than you thought, then maybe in the next quarter, you would save a little bit less for tax as a percentage. Maybe you overestimated your expenses and you're actually doing better than you planned, then in the next quarter, we would increase that percentage a little bit to compensate. But because we use a percentage of income, it shouldn't actually be that far off, because as your income goes up, the amount you save goes up because we're using a percentage. So at the end of the financial year, if you have a little bit too much, well, that's just a bonus for being a savvy saver and a good money manager. Now, this is all information and I have gone through this really quickly. There is always a written blog for my contents and I will make sure to include the link in the description. But even if you read that and it still feels overwhelming, I have help for you. My money management makeover will guide you through this. So we have 4 sessions over Zoom. We spend over 4 hours going through this stuff, making sure you have a plan to manage the business income that's coming into your business, the cash that's coming in. We make sure that we know exactly what jobs that needs to do. And one of those jobs that money needs to do is cover your taxes. We will get you to a nice estimate and know what you're spending in expenses, what profit we're forecasting, and therefore what tax you should be saving. I will leave a link to this, to the information in the description, but as ever, if you want help, please reach out to me. My email address is always in the description. If you've enjoyed the video, I would love you to leave me a thumbs up or a comment, and otherwise, I hope to see you in another video.